I'm John Hanna for CityTV.net here in New York City, and we have three amazing gentlemen here with us. We're going to be talking about the natural gas industry. First up, we have our Monday regular contributor, Greg Womack of Womack Investment Advisors, joining us from Edmond, Oklahoma. Good afternoon, Greg.
Good afternoon, John.
All right, so let's get Dirk as well. He's the Chief Equity Strategist at Zacks.com, joining us from Dayton, Ohio. Good afternoon, Dirk.
Good afternoon.
All right, and the next gentleman that we have is Dennis Gibb, the President of Sweetwater Investments, joining us from San Francisco, California, right, sir?
Actually, Seattle, Washington.
Seattle, Washington. There you go. All right, welcome aboard. Okay.
Thank you.
So let's start with the opinions first. Let's start with you, Greg. What is your opinion on the natural gas right now?
Well, the opinion, of course, is we've got a lot of it, and so supply is high, and prices are record lows. We've seen in many years, and as I mentioned here in Oklahoma, that's a big part of our economy is natural gas and production and drilling and also oil, but so it's a big part. So I think as we look into the future and as oil continues to go higher, we're going to be forced to use more natural gas in our daily lives, in transportation, etc. And so a lot of factors out there, but overall I think natural gas is a great energy fuel for the future.
Okay. And Dirk, what are your thoughts about natural gas?
Well, I mean, a lot of that is, I would say, ditto to what was just said. I do think, then one says, all right, how do you play it? Playing the commodities is, a risky game to say the least. I do think that, over time, that gap between oil prices and natural gas prices, currently the ratio is at its most extreme level ever, has to change. And I think that will eventually happen with natural gas prices rising, but we do have, an enormous oversupply of it right now. But, the benefits to the economy of moving to use natural gas as a transportation fuel would be huge. I mean, we've got, over half the trade deficit is because of our addiction to oil. And, there are a couple ways you could do that. Either the compressed natural gas, so that the Pickens plan type thing, or we could start building some plants that would convert natural gas into methanol and stop using ethanol, which, is made from corn, which is literally starving the world, that strategy, which would make a lot of sense and could be blended right in with the existing engines. The other thing, right now, if volume of gas demand, has to go up, but there's a huge supply, it strikes me the way to play it is the pipelines, because there's going to be a lot more traffic in the stuff, and own the toll booth. And for the current environment of really low gas prices, it looks like a great thing for the users of natural gas. Now, to some extent, that's everybody who heats their home with natural gas. But more significantly, we've got a huge competitive advantage in making fertilizer right now in this country, because U.S. natural gas prices are so much lower than the rest of the world. Natural gas is very difficult to transport across oceans. It gets pretty expensive to do that. Now, we are starting to export some LNG, but it seems, a good place to do it is, just exporting fertilizer, which is, mostly the cost of nitrogen-based fertilizers is mostly natural gas. So you look at a company like Terra Nitrogen, which, has just been on fire due to this. Now, will they be able to maintain that for 5-6 years going out? That's a bit of an open question, but I think relative to the rest of the world, our natural gas prices are likely to stay low for quite some time.
And Dennis, your thoughts?
Well, I agree that we're in surplus with natural gas. I'm not as sanguine that the surplus will continue because of some troubling disparities, particularly in the shale gas areas, about what their production curves are and whether or not we can drill enough wells to keep production where it is. That being said, the current surplus of natural gas, should it last for several years, offers the United States a tremendous opportunity to redress some of the outflows of jobs and manufacturing that have happened over the last few years. For example, natural gas is one of the major feedstocks of petrochemical companies. A lot of petrochemical companies have moved overseas or moved to more favorable jurisdictions. If we think this is going to last for a long time, we should be soliciting those people to come back here because of the cheap feedstock. But gas does offer us a lot of opportunities. And just to put this in perspective, at current oil prices, 2012 will be the first year in which the price of energy, purchased energy, imported energy, will be more than $2 trillion worldwide. At current prices, oil is going to cost the world 3.4% of its GDP. Any way we can reduce that is going to help the emerging nations and help everyone else be better. So, I'm favorable towards gas. I think there's a lot of different ways you can play it depending upon what your perspective is. I happen to think there's going to be a big market in LNG going from energy gas surplus countries to places like Japan, China, and these other places who, and the margins are going to be very wide. So I have a fairly substantial investment in LNG tanker companies at this point.
Okay. Now we've identified the need for having the demand a government push as well, and as well as installing natural gas filling stations throughout the country that would significantly minimize the need for imports of oil. Now, where's the play here? Where's the investment play? Are we looking at the drillers? Are we looking at the transportation trucks? Where's the play here, Greg? Let's start with you, Greg.
I think Dennis mentioned several of those. Clean energy, the ones doing the gas, the refueling stations, and Westport Innovations. Building the engines. They were also working with Navistar, the big truck maker, as well as Cummins, and as he mentioned, and others. So some really great plays there. But I think also the drillers on a long-term basis, many of those are trading really at really good book values and way undervalued compared to the oil companies. So there are a lot of smaller gas players that are even here in Oklahoma. We have, of course, Devon and Chesapeake and Sand Ridge and those companies that are still very attractively priced.